Here's a little topic we'll touch on today. Not discuss, just touch on. The power of belief. Don't worry, I'm not going to go religious on you. I just want to talk about the way investors react differently, even to the things some companies do the same way. Nanotech Entertainment is a great example for this. About 2 weeks ago, on the 17th of June, Nanotech suddenly experienced a surge. In a matter of just 4 sessions, the share price went from 5.1 cents to 7.7 cents, registering 30% or more gains in 2 of them. And the reason for the abrupt attention is a mystery. Nothing around the date should incite such a strong reaction, yet it did happen. Nanotech's management decided to capitalize on the situation and issued a PR. Inside it, they announced their Nuvola media player passed the Google Compatibility Test Suite, or CTS for short. This was on the 20th of June, the second of the 30% or more sessions. A dollar volume of over 1 million was registered that day, the biggest number since January. This was followed by the startling $2.5 million on June 25th, but this time, Nanotech ended 15% in the red. Now, here's the reason I'm saying all this. Why? Sure, the price couldn't take the pressure. That's understandable. People decided to cash out on the profit. But on the same day, there was a Twitter post from Mr. David Foley, co-founder of Nanotech. There he talked about the Google I/O conference, and the sheer mention of Google generated hype. But this was short-lived. Why? If you look at the charts, since December, the company's stock price has been on a roller coaster ride. It has logged lower after each resurgence, which is surprising at first, considering the company's last known financials. For the first 3 months of this year, they're recorded as such: $34,000 in cash, $1.5 million in current assets, and $580,000 in current liabilities. Those are the more modest numbers. Here are the impressive ones. Over $5 million in gross sales for this quarter, and over $300,000 in net profit, a bottom line that's leagues ahead of most other penny stocks. But then, after a little digging, some facts that are subtle as a bear in New York begin to surface, and they explain traders' reluctance. In 2012, Mr. Foley reportedly pled guilty on counts of conspiracy to commit mail and wire fraud, as well as conspiracy to commit bank fraud. There are other red flags too. Millions of shares issued as a conversion of debt are nearly at the end of their restricted period and may depress the prices once they're free. The Twitter post we mentioned was thought misleading by investors, and they accused Mr. Foley of generating false hype around the stock. One online user went as far as to practically say that Nanotech hasn't acquired a Google Play license despite passing the CTS because they haven't bragged about getting it. As a whole, investors have lost faith in the company's management, and it seems earning it back will take a lot of energy. One attempt to do this is in an interview with a website called The Online Reporter, where the delay of Nanotech's product, Nuvola, was explained. According to the company spokesman, Andy Markin, the decision was made not to have paying customers be the beta testers. He also said that there were pre-orders of 10,000 units through different channels. But you know what? The interview practically had no impact on the share price. Trading remains completely volatile with swings in both directions. If you intend to invest in Nanotech, paying attention to this is of utmost importance. This is Martin Nadinov for Hotstock.com.
I have a small amount of money to invest and I want to gamble in the market. I'm looking for a penny stock that'll go up and turn it into $100,000 or $1 million.